A very good afternoon, everyone. Welcome to uLaw CPD webinar. Topic for today's session is Law Society Bookkeeping Compliances. This is a 1 hour of professionalism CPD, and the link for today's CPD as well as the topic information will be shared towards the end of the webinar. I request each and every one of you to stay until end to provide us with the attendance, so we'll be able to share further information in regards to today's CPD. I think more people are trying to join in, so let's give it a minute or two. If everyone is able to hear me well, I request one of you to please let me know in the chat window. If you have any audio difficulties, use the phone audio option that's available under the speaker. Awesome, thank you. Thank you so much. Great. Let's get started off with the topic. We have a small agenda that we would be working on. As you all know, we are almost approaching towards March 31st, almost there. Another 45 days. It's time to be completing all your annual report filing soon. So we thought this topic would really be helpful, more like a revise it before filing your annual report with Law Society. The agenda that we're looking at today is what are different ledgers. So sorry, I have a throat infection. Give me a moment, please. Sorry about that. Yeah, so we're going to be talking about different accounting statements that would show all the information about the transactions or data that has been entered into the respective software that you're using. And these are all mostly Law Society compliant documents. May it be the journals, may it be the trust ledgers or the general ledgers, disbursement journals, reconciliation documents, fee book, other compliance documents such as Form 9A, deposit slips, receipts upon receiving payments, retainer letters. We're also going to be seeing how you could be producing or generating all of these documents with minimal time, provided you have a software, and what are the benefits of using such a software like uLaw. Sorry, I just have to let somebody know how to access the audio. Please give me a moment. Okay, there are a few people saying they're not able to hear me, so perfect. I've let them know that they could access audio. I hope they hear me. Any which way, this session's being recorded and will be available on our YouTube platform as early as Monday. So let's get started. With a little bit of basics as to what can you expect from an accounting system, what are different types of accounting systems, starting off with manual data entry, manual double entry, or a spreadsheet software, or using a general accounting software like a QuickBooks or any, there's so many, right? Xero, QuickBooks, even Wave for that part helps you with accounting, but doesn't give you all these reports. And lastly, and most importantly, which is legal accounting software. How are these designed? How are these helpful for trust accounting? Most importantly, most of you have trust accounting. How can a legal accounting software be helpful? Keeping in mind all the calculation that goes behind all your client matter management receiving payments into trust, raising an invoice and moving the money from trust to the general. What are the sub-ledgers? Where does it get posted? What are the financial reports that gets produced? All of these are very important. And one of the best thing about using a legal accounting software are these are readily available, provided you obviously give us the data. Upon giving us the data, we give you the output, which is the documents that are generated from the program. That will be helpful for you to be compliant with Law Society, at the same time helpful for your practice as well. But now, very basic thing here is that you need to know is to have your own bank accounts. Of course, these are business bank accounts tied down to your own practice, keeping in mind that each of these bank accounts has debits, credits, respectively. Trust strictly used only for your client funds. Any money that comes into your trust is mostly retainer or other trust deposits. And any money that goes out of trust are mostly after billing out your client, letting them know that whether this was for your legal fee or this was for any sort of disbursement. And then, you make a move from trust to the general respectively, and then it becomes your business money or funds into your general account, where all your bookkeeping requirements starts playing a role. Now, bookkeeping is a very niche terminology. It's something that is bothering a lot of us, but trust me, when you have a system in which you maintain your books, like, when you get payment into trust, this is how you record it. You have the method of payments, you have the appropriate dates, you match with the amount to the T, and you also give them a receipt. Every transaction when received into trust or dispersed from trust are recorded due diligently. Like I said, when a money or, when a penny leaves trust account, you need to record them within the trust, saying that it's a withdrawal and how was it withdrawn, what was it withdrawn for, the purpose, the date, the amount. Everything needs to get on the sub-ledgers, ledgers, journals. So when you make an entry, it gets posted on to the respective accounts. That's how it works. And each of these sub-ledgers or ledgers have all of these particulars that you're actually seeing here on my screen, which is an example, right? It has a date, it tells you who's this account for, what is the statement, first of all, is it a client's trust or a general ledger? Under trust, you see both payment in, payment out, same way for general, payment in, payment out. So general, obviously, there's a debit when the invoice is raised, and then there's a credit when the invoice gets paid. And the invoice could get paid in two different ways. One is if the money is lying in the trust account, after you raise an invoice, the money gets moved from trust to the general. Or if there is no money in trust, let's say not everybody operates with trust account, right? Some of you might not have a trust account. You operate only with general account. Keeping that in mind, when you raise an invoice, you get the money into the general account directly. And that is called as payments on general account or client payment into the general account. And as you progress with that file, there's always a running balance, money coming in, money going out, what is the current balance, and all these things are recorded in the in the ledger, whether it's trust or general respectively. And further breaking it down is called as journal. Whereas in case of journal, there are 4 different types of journal. Like how for ledger you had only 2, which is one for trust and one for general, because that ledger records both receipt and payment activities. That is both debit and credit under one ledger type. But in case of journal, they are single type of activity that gets recorded under each of them. For example, the trust receipt journal shows only the amounts that has come into your trust account. Now, when does these things get useful for you is when you are trying to understand what has happened in a particular client's account or what has happened in your trust account on a specific date, on a specific time of the month. Now, journals shows you a bit more detailed version when compared to ledger. Like over here, you see source of funds. Where did it come from? Where did it go to? And respectively, right? And then you have method of payments. Was it paid using check, credit card, debit card, etc. So journals, like I said, bit more detailed version, shows you every single type of activity. If it's client's trust receipt, shows you only money received into trust. If it's client's general receipt, shows you only money received into general. Likewise, client's trust disbursement shows you money gone out of this trust account. It could either be for trust transfer or it could be for a disbursement purposes, most likely. And trust and general disbursement journal is mostly either your your client, your office expenses or your client disbursements. There are mostly these two that are available in the are seen in the general disbursement journal. So keeping that in mind, when you record a transaction, try and record as much as information as possible, starting off with the date, the particulars as to what is their description, and then the amount, matching that with bank or with the method of payment that you opted, and including the method of payment, of course, specifying that with the reference numbers, even better bonus points. So all of these are to be really transformed into a complete document generation that happens at the time of your monthly reconciliations or your annual report filing, when you, or even your audit purposes, or for let's say your taxes filing, whatever it is. These are the reports that really come helpful for you at that time. Going past the 2 ledgers and the 4 journals are the reconciliation documents. There are 2 or 3 reconciliation documents that you would generate. Top one is trust. Second one is general. I say trust as top because trust has a mandatory regulation for you to reconcile it on a monthly basis. Let's say we are in February now. So by end of Feb, which is by 25th, on or before 25th of February, you're obliged to reconcile your books as of 31st of January 2025. Now, keeping that in mind, what are certain things that will help you to achieve a reconciliation without any, difficulty, to be honest? Number one, recording your transaction as and when you progress with your books. Number two, being very precise in terms of, like I said, date, amount, who does it belong to, entering them under the respective matters. If there is money that comes into the trust or goes out of trust, you handle it from the client's matter respectively. It's not an overall trust money or it's not an overall deposit. It is something that is probably, if I have to put it this way, it is something that is attributed to a client's file. And during this process, you record the transactions that takes place in the trust and general respectively, deposits that comes in with all the method of payment, the amount, the date, the running balances, everything recorded appropriately. And then when it comes to the reconciliation, this is where you start, basically working backwards. You have your bank statement in hand, and then you're looking at your software. You're trying to reconcile your books. You first take your balance as per the bank statement that you see on the closing date, let's say 31st Jan, and all the outstanding deposits, right? Those are added, all the outstanding checks. There will be some checks that you have issued to your vendors or you issued back to your client saying refund. Those are all some checks that were not deposited as on 31st January. Maybe they were deposited on 1st Feb, maybe on 2nd Feb, or later on. So those needs to be reduced from the actual bank balance, and then outstanding deposits needs to be added, and then you will be arriving any bank errors, like, somebody has charged you wrongly into the respective bank accounts. Then you make sure that, mostly it will be your bank, the bank personnel unknowingly would have charged in bank fee into your trust account, which is actually a mistake. Or there could be an error that you would have made too, like, by mistake you transferred more money out of the trust account or less, it depends, right? And then whatever is the error, you plus or minus the bank error appropriately. Then you arrive at a reconciled trust balance. Now, this is for trust, mostly for general account, and then you also have credit card. Those are the other two. Credit card is also termed as general. Any non-trust account, obviously general. So general and credit card, you take the balances, you just do the same math. Any outstanding checks, any outstanding deposits. No bank error in this case, and no outstanding check or deposit in case of credit card as well, mostly. So these are some points that you might want to pay attention to, especially when you're trying to reconcile your books. As you see here on the right-hand side of my screen that I'm showing you all, you'd see that there's a 4-step process to reconcile your trust. Number 1, recording the balances as per your bank statement. Number 2, reducing all your outstanding checks from the balance and adding all your outstanding deposits. And any plus or minus bank error, you arrive at a bank balance, a reconcile mixed trust bank balance. And this will eventually provide you with client trust listing showing you this is what is needed. These are the balances rather with certain clients in your trust account. That's called as client trust listing. So when you generate a bank reconciliation statement, an additional page gets downloaded saying these are some of your clients that has balances in the trust account, and that balance should ideally match with the balance as per the bank statement. Keeping that in mind, you run the trust comparison as well and show the total reconciled balance that off with the unexpended bank balances. Now, let's say general is very similar to that of trust. Like I already mentioned, only thing that will not be there is the reconciliation for general will not have the bank error over here. And moving on to fee book, there are a few other documents we discussed about: 2 ledgers, 4 journals, 2 reconciliation documents. So far, we have 8 of the compliance documents that are mandatory to be produced month on month for bookkeeping compliances. And as part of it, we also have a fee book, which is showing all the records of invoices raised in a particular time period. And that has who's the client, what is the invoice number, what is the amount billed before taxes, after taxes, and also these are the fee that was charged to the client associated with all the taxes that were collected eventually. And as you see here in the sample very clearly, we have the dates, the invoice numbers that this particular fee that was charged to the client belongs to, and along with, of course, the fee and any disbursements if they are billed to, with the total billing value. Now, this fee book will obviously help us calculate a couple things, help you understand what was the revenue made in that particular period. And also, if you have to remit any HST to the government, you obviously have a taxes report with HST, but to compare and see if everything looks good with that for that particular period or quarter or whatever, you can come and download the fee book and look at it and know what is the HST that is to be paid to the government. Very clearly, it shows you this is the fee that was billed, this is the HST, this is the total, right? So you can compare the HST that is shown here with that of the HST that is shown under the taxes report. And that way, this works for all taxes, HST, GST, TST, all very similarly, and you'll be able to arrive at these numbers more accurately, especially when you're comparing it. Now, what are the other compliance documents as part of Law Society bookkeeping compliances? Definitely Form 9A. Form 9A, many of you, if you're from Ontario, you would know that every time you move money from trust to the general or out of the trust electronically, you're required to maintain this electronic fund transfer form, which is called as Form 9A, and it needs all your numbers that you need to transfer from one account to the other account, mostly trust to the general in this case, telling it which client it belongs to, and also other details that probably includes as to who's the recipient, what is the recipient bank information, where was it sent from, and other things. Mostly these are Form 9As are downloaded for money that is moved from trust to the general, very rarely for money that moves out of trust in electronic format. And that being said, all of these are part of the compliance documents. As you all can see here, electronic fund transfer requires Form 9A, and cash deposits is where you need to provide with a deposit slip. And these also typically carry Form 9A with verification documents, duplicates, etc. No, they're mostly needed only for, there's a nice question here. Are deposit slips required if all deposits of retainer fee from clients are done via intra-key transfer? They're mostly done. Deposit slips are for, the ones that are cash deposits, not otherwise. But yes, when you give them, you need to provide a receipt to the client that is there. But deposit slips are mostly for the cash deposit slips, because you get a cash from the client, you are giving them, issuing a receipt, but a deposit slip needs to be entered immediately, because sometimes you would deposit it later, and at that time this deposit slip comes handy. Okay, moving on to how much time is needed managing all of this. Like I said, now this could be done in 10 minutes. This could be done in 3 hours. It totally depends on the volume of transactions, volume of your business transactions at the same time. If you're doing it on a regular basis, like daily, weekly, monthly. But end of the day, they are very simple to be done as you progress, especially using a software like uLaw that allows you to enter data and produce documents within no time. But every entry should be made sure it's entered and matched with your bank records, and also make sure that all these information was recorded well in advance to your reconciliation dates. You don't go and record it at the last minute. Make sure that they are entered from time to time, and they're also otherwise you're probably going to end up making mistakes. So now many of you, if you do it on a real-time basis, how much you remember about that transaction would probably be much more than what you would be doing a few days later. So try and record these every now and then. And seamless accounting can be achieved, especially when you're using a software, when all of these information that are being recorded from time to time, avoiding mistakes. You also use matter management well. And you also have all these accounting transactions, saving time, preventing errors, and making your reconciliation much simpler than you think, because you do it real time mostly. So when a client pays you, you go into the matter, you enter the payment as a retainer or the client payment. If you have to enter a client payment, if you're using a program like uLaw, you are forced to raise an invoice, so which is again it's aligned with the Law Society rules as well, saying that when you receive payment into the general, you need to make sure that you have issued an invoice. So you also have fulfilled all those requirements by using the program. And hence, the reconciliation becomes simpler because all the respective records are entered in, and automatically these ledgers gets posted, or rather information gets posted into these ledgers or journals, and all the workflow are maintained, and the bank records match very closely with that of the program. Hence, reconciliation becomes a very easy task. Very few people know the benefits of using a legal accounting software. As I already mentioned, record as and when the transaction takes place or happens, or the event takes place, and recording these financial records and bank records as close as possible. So, you can make reconciliation a very simple task. So let's say for example, every second day you log into uLaw and you enter all the information about your client, their matter, if they have some dockets to be done, invoice, and some on the accounting side where you accept payments, you get retainer, you also, let's say you have invoiced transfer money from trust to the general. Now, all of these are a little complicated when you do them manually, because obviously you maintain an Excel spreadsheet and then you try to do them. Let's say now nobody does these paper pen method. Obviously, the least that you would use is an Excel, assuming that when you're using a platform or a software like uLaw, it doubles your it doubles all the requirements that you need to fulfill, but at the same time, it also helps you to be compliant with Law Society. Now, I'd like to pause a moment to see if you all have any questions. I see some on the chat window. Just want to make sure that everybody has been answered. Okay, great. I think I've answered them. Quickly moving on to showcasing you all how our uLaw platform looks and what are these bookkeeping compliance documents that I can generate from my program. Since I represent uLaw, I'd like to show you all how it works in the uLaw. And I'd like to also mention the topic for today's session, Law Society Bookkeeping Compliance. I'll be entering the topic information again towards the end with all the link for the attendance. In the meantime, if you all have any questions, please do not hesitate to reach out to us on the chat window. Okay, right here is a contact that I have. Let me take this particular contact. I can go into the matter. This one has a few dockets. And if you're planning to invoice the client, as soon as you invoice the client, you ask the client for the money, and the money comes into your general account. Now, if you already have money sitting in the trust account, which is very similar in the case that you're seeing, there's some money sitting in the trust account, you're going to invoice the client and move that money from trust to the general. And once that happens, when you generate a client trust ledger or a general ledger, you will actually see all the information in it populating for your requirements, and that would match with the bank records because you do it here real time. Let's say for assumption purposes, you do it on the real time. It's easier for you to match that with the bank, and hence the reconciliation becomes simpler. So in this case, you have a docket. Now, let's say you invoice the docket. Upon invoicing, the first thing that should come to your mind is to issue the invoice to the client. Let them know that, hey, this is the invoice for the work that has been done so far. And here, this is the amount that is available in the trust account. And you pay yourself by transferring that money from trust to the general. Okay, so here's the invoice. Sorry, it takes my PDF has some issue, my Adobe has some issue. So it takes a minute. Okay, there you go. So the invoice is out, and as soon as the invoice is out, you send it out to the client. But very clearly it says that there's so much money sitting in your trust account, and but your client still owes you so much. So you can then go back into the program, click on question mark, and first transfer what is available in the trust account. That is what is available in the trust account. Once you transfer what is available in the trust account, and the remaining amount will be provided to you by the client into the general account. So over here, what are the accounts that gets posted? The money goes out of trust, money goes into the general account. You're using an electronic fund transfer format. So as soon as you click transfer, you see Form 9A download. So there's one compliance document that you have straight away fulfilled, which is Form 9A here. And you've also entered the details that gets posted onto the subledgers and journals for both trust and general respectively. So let's say, for example, you go into compliance documents, go into monthly compliance. Let's see what is in for client's trust. Very clearly shows you all the money that has come into the trust account and gone out of the trust account. Sorry, excuse me, just give me a moment. I have a question here. Would you mark the invoice as paid as the amount is taken from trust? Once it is taken out, yes, you can mark it as paid. Yeah, you can mark it as paid when it is taken out of trust. But while you're raising the invoice, you are not yet getting paid, right? It's assumed that you get paid only after you raise the invoice, because in case of trust, but if this is the case, where you have money sitting in the trust account, and that has to be moved from trustee general, and you are raising an invoice. Then yes, when you raise the invoice, you can show it as paid. So because you're just going to move the money from trustee general, which is already there. But if there's no money in the trust, in that case, then you cannot mark it as paid. Let's say you have to raise the invoice to get the money in trust, and then you move the money from trustee general. At that time, you don't show it as paid. That's what I mean to say here. Okay, so you go back in there, say download the client's general. So I have both client's trust and client's general now downloaded, and I'd like to show you all how it looks. This is my client's general account, shows all the legal fee that was raised with the transfer that was made from trustee general that I just made, and any other trust transfer. So basically it has fees being billed and that being paid, either by trust transfer method or by paying directly into the trust account or into the general account. In this case, we are looking at the client's general ledger. Hence, it has money that is either transferred from trustee general or directly paid into the general. Let me now show you one more time. So right now, you only see 4 transactions under there. Now, if I go back into the matter, this client owes us some money. So when I click on question mark, click on payments, and let's say I enter the amount this client needs to pay us. What was the method of payment? Enter that. Okay. Of course, you give them a receipt. A receipt's also done. So you go back in there. You just verify now by clicking on accounts, clicking on compliance, download the client's general ledger. Will show you the additional transaction where the money was directly brought into the general account, the 5th transaction. The previous time you saw only 4 transactions, but this time you would see the 5th one. Okay, cool down, and you get to see the 5th line item that we didn't see the previous time because I just accepted it and I have entered it here. Okay, so we also have the split up of the amount that is legal fee plus taxes. So you know what portion gets into your taxes account too. Okay. The next one here that I'd like to show you all is the journal. A little bit more drill down version of client's trust receipt and client's trust payments. So any payments that was made out of the trust account will be shown here. Here's the client's general. So all the legal fee that has been transferred from trust to the general are all shown here, as well as any payments, any other payments that was made out of trust will also be shown here, like any disbursements, any of these. Alongside this, the other statement, I have another question here. Oh, nice question. Okay. All your legal fee that gets billed and you transfer the money from trust to the general, you can either see it here under the client trust disbursement or payment journal. Of course, you have to exclude all the disbursements that are being made straight out of the trust, but you can see all the trust transfers under the client disbursement journal, or you can also see them under your Form 9A, because you would have made trust transfers electronically. If it is made electronically, you can see them. The best I would suggest is your client's trust ledger that would show you both deposits and withdrawals of the trust accounts. If you're looking purely only for transfers made out of trust, then please use client's trust payment journal that shows all the debits from the trust account, out of which you will see the trust transfers there. We also have something called as, so you can also find them under here, under journal, under client's trust, which is payments. Okay, so over here, do this. Right, just give me a minute. Yeah, these are your trust transfers. This is called as client trust disbursement payment or journal that shows your trust transfers. Showing you all the payment journals once again. This one shows only legal fees that was transferred out of trust to the general. Okay, there's some, if you're looking for something called as excluding disbursements, let's say for this, for example, this particular invoice had both legal fee and disbursements, but you had transferred only the legal fee here. The disbursements part is shown under the disbursement journal. This one has payment journals. It's account disbursements or payment journal. Hence, it focuses on your legal fee that was transferred from trust to the general. I hope that clarifies. I think I've got your email ID here. I can probably reach out to you for further information. Going back into compliance documents, we also have something called as fee book, which I'd like to showcase with all the fee that has been generated today. Let's say we download the fee book. It has the invoice number with taxes, without taxes, total, everything in there. So here I have raised 2 invoices today for this client, and they are both entered under the fee book with the date, particulars saying this is part of this is the legal fee portion, and this is the HST portion. So fee, HST, or GST, PST, whatever respectively, and the total. Of course, there's the invoice number, which is one of the most important things when it comes to ebook. So you can cross-verify the invoices that was raised and move the money from trust to the general, if it has to be, of course. And how else can you see that the money was moved or not? Like I said, in the journals, we have 4 different types of journals. When you do client's trust payments, that's when you see all the payments that went out of trust. But when you want to see only the client overall disbursement journal, then you can go into journal. Then you can do client's either trust payment, or there's also something called as an expense journal. So you will see any expenses that was made on behalf of the client or on behalf of the firm, respectively out of trust or the general account. Sorry, I think I went into the wrong tab. Just give me a moment. My PDF is acting a little weird today. Apologize. I'd like to show you all the difference between a fee book and that of a journal. What are the information that's available in here? Yeah, so in today's account, I didn't raise any expenses from client's account. So because of that, you won't see anything here. But let me show you how it looks when you go back into the matter, go into disbursements. Let's say you add a disbursement as if it was paid from the general. So let's say this was something to do with filing fee. You're charging your client so much. You also paid so much. And then you use your general account to pay. Maybe you used the debit card. Okay, and then you save it. As you progress, you now go and generate this particular document generation. Under journal, you have disbursement journal, expense disbursement journal. This will show up now with more information. Okay. Let me open it for you all. Sorry, just give me 1 second. I am not pretty sure why it's not opening. The document's not opening. Like I said, give me 1 moment. Once again, you go back into the matter, make sure everything is in there. Okay, so we have the fee, filing fee, everything. Go back into accounts. Let me go from the compliance. It's loading. Give it a moment. Monthly compliance. Let's download this. The general disbursement journal should have the $150 now. As we opened it, hoping it opens up. Yeah, there you go. So we have the disbursement payment journal, expenses with taxes, the filing fee, the description, what is the method of payment, who was paid to. So I made sure I entered all the fields. So when you populate, it comes up with all the disbursement entries. Including whether it was tax exempt or not. So it's a disallowed expense, so it's completely tax exempt here. Okay, when you go back in, and let's say we also download an expense book here, because it was 2 in 1. Remember, I also entered the top portion of the disbursement journal and the bottom portion. So the top portion was what went into the general disbursement journal. Now, when I do an expense book, it should show the $150 as a report expense into the expense book as well, saying that this was paid out using, there you go. So this is coming out of the expense book as well, as we have reported the expense saying this was paid out of the general bank account. And with the client and everything. So we saw fee book. One other thing that I'd like to show you all is Form 9A with the transfer entry that was made from trust to the general. So what really matters is the completeness of the information, right? So when you generate a document, you can generate the document incomplete as well. But there's more value added when you have most of the information, most of the fields rather filled out and looks more complete. Like, for example, who it was paid to, what was the method of payment. A lot of us always concentrate more on the date, amount, particulars, and then maybe some of us type the reference numbers. But some things like, what is the method of payment I used? Who did I pay to, which is the paid to field or the recipient field. These are some small things that goes a long way, especially when you generate these documents like journals, ledgers, Form 9As, fee book, expense book, all of these documents that we saw today. They're typically part of bookkeeping compliances. It's not always just the reconciliation documents, right? Reconciliation documents are one of those with the bookkeeping compliances too, but bookkeeping compliances has more than just the reconciliation documents. So one of them is again Form 9A, which is whenever you transfer money from trust to the general using electronic fund transfer, or when you move money out of your trust account, again using electronic fund transfer method. Any time you take out money out of trust electronically, let's put it that way, you need to, if you're in Ontario, you need to submit this particular form called as Form 9A with all the particulars, client details, amount, the reason, whether it was any disbursement or whether it was for your legal fee, which account was it debited from, which account was it credited to, and the references, numbers, and of course with all your signature and additional information. And as you progress further, you get to see all these transactions falling into your reconciliation documents, and that is when reconciliation comes really handy. It becomes very simple. So for you to be able to do it in 10 minutes, you should have gone through all the steps that we discussed today, right from the time you raise an invoice to the time you add a payment with all the particular information that we discussed. And when it comes to the reconciliation tab, it's super simple that you enter the date, you enter the amount, which is the balance as per the bank statement. Then you see all the transactions in your bank account. You see that in your uLaw account. You start clearing them because reconciliation is not that difficult. Of course, it could be time consuming, totally based on your volume of transactions. Now, you cannot ask me if you could do 100 transactions in 10 minutes. I would rather say I could do 10 minutes, 10 transactions, right? Like just for an example. So it totally depends on the volume of transactions of your business or your practice. But it's definitely going to be relatively simpler when you follow a format in which you enter data. At the same time, you clear all the transactions from time to time, including all the deposits and withdrawals. But anything outstanding, please make sure to note that and don't clear them, right? Like many of the times we are stuck and not able to progress because you would be thinking, oh, I issued a check and it should be cleared in the bank. Please look at your bank statement once every now and then as you progress, and and try to clear the transactions only that you see in your bank statements. And then you would be able to see the amounts are matching, which is in the step 4 that you're seeing here, and you will be able to see the reconciliation button. All right, so one more thing to remember for your trust reconciliation is bank error column. Now, bank error could be, like I said, error made by the bank if they have charged you for any filing fee or rather any e-transfer and stuff that was made from trust instead of charging in your general. Then you need to mark it as a bank error, let them know that going forward do not charge in your trust, or even if they charge, you religiously move the money from general to the trust to compensate that on the same day. And then it won't show up as a deficit in your trust, and it's all good there. But in case of general, it's totally fine. There's no bank error concept in general account. General credit card, they all go similarly. So to keep in mind, summarizing it, enter the transactions every now and then, match it to the T with the date, amount, particulars, method of payment, reference numbers, 5 different things that I would really recommend you to do. And issue receipts, issue payment deposit slips, try to keep compliant from all the aspects, right from matter management to the financial management. Your ledger journals, even though doesn't help you too much, but for the compliance part, it goes a long way in recording all the transactions. So do make sure that every column or field that has been asked there is being entered by you when you record transactions. Could be method of payment, or could be the particulars, could be the invoice numbers. Of course, if you're using an automated program like uLaw, you would see them generated automatically. However, you need to give us key information, so we give you a complete document. And last but not the least, reconciliations to be done on a monthly basis, so you are compliant as well as you're able to understand what are the outstanding deposits or withdrawals, if any, to be followed up and fulfilled. I think we're almost to end of the webinar. Would like to see if there are any questions in my chat window and take some questions offline too, so I can stop the recording and answer most of your questions. Yeah, please hang in tight. I will be sharing the attendance link to get your credits, and I will also be sharing your topic for today's session, And I have a question. Okay, hey Damon, hi. So let's see, you're asking me how can you add, so you have to go into your respective Law Society portal and key in the topic for today's session, and you could then also give the details as to where you attended the webinar and etc. So you would be entitled for the 1 hour of professionalism CPD credits. Yes, 1 hour of professionalism CPD credits. Nice question, Sonam. I'm not sure, unfortunately. How about I DM you? I'll directly message you so you can give me your email ID, and I can probably, take it from there. But please stay here. I'm going to turn off the recording, and I'm going to share the links for attendance and topic details. So please don't leave until you get that. But continue asking questions so I can take them all. So I just wanted to thank each and every one of you coming in here, taking time off from your Friday afternoon and doing the session with us. Really means a lot. I think there's another CPD scheduled for next Friday. I'd probably wish everybody to join in for that. We will share the topic details as well in today's session. Thank you so much and have a wonderful weekend.